In the last video, we started a series on the top 5 best performing listed companies in Kenya over the last 5 years. Today, I want to unveil the number 5. My name is Pius Mushire Mugo, the Managing Director of Nabo Capital, and you're watching Invest in Africa. Number 5, the best performing listed company in Kenya over the last 5 years was Nairobi Securities Exchange. If you invested 100 shillings in 2014 when the company was listed and reinvested the dividends until today, your 100 shillings plus dividends would have accumulated to 220 shillings, translating to a return of 120%. Nairobi Securities Exchange, as the name suggests, is in the business of providing a platform for trading public securities. And we have about 60 listed companies at the Nairobi Securities Exchange. We attempted to explain how did Nairobi Securities Exchange deliver 120% cumulative return over the last 5 years. And we started by looking at the numbers, but the numbers could not explain to us because fundamentally speaking, they've actually deteriorated. Revenues in 2014 was 642 million shillings. And today, according to the last numbers that we saw, it was 582 million shillings. Profits were 320 million shillings in 2014, and today it's about 216 million shillings. So we cannot explain that performance based on numbers only. So the next question was, were there some events that drove that particular performance? And first and foremost, noteworthy was it was an IPO, and probably the only IPO that we've had since 2014. And IPOs tend to come with a little bit of hype, and maybe that is one of the reasons why that particular company has delivered 120% return. Another reason could potentially be just the ownership structure. If you look at the top 20 shareholders, they together own a combined stake of 73%. Out of those 20 top 20 shareholders, 12 of them are stockbrokers, meaning they are actually involved in trading securities at the stock exchange, and together they own a combined stake of 28%. So as a group, they are the largest stakeholders in the Nairobi Securities Exchange. Could this be hindering the free price discovery of the share price? I'm not sure, but it is possibly one of the explanations. Another potential explanation was Nairobi Securities Exchange has been driving introduction of new products, the derivatives, the EFTs, and the real estate investment trust. We haven't seen the success yet, but it's possible that investors may have looked at this as potential sources of new revenue lines, which could have impacted on the cash flows of the business positively. So we think that the performance of the company is much more driven by events more than the fundamental numbers, and it will be interesting to see what happens in the next 5 years. The challenge for the CEO, Jeffrey Odundo, will be, can they bring to the market new IPOs? And there's recent talks of the government privatizing some of their big public sector businesses. That could be a very interesting development for the Nairobi Securities Exchange. We need another Safaricom, and the sooner it comes, the better it will be for Nairobi Securities Exchange and its shareholders. Another challenge would be it would be just the market movements, ups and downs. The last 5 years, we've had 3 out of 5 bearish markets or bearish years, and the next 5 years, if we'll be more fortunate, maybe probably to have just one, then it might be a better period for Nairobi Securities Exchange and its shareholders. Thank you for watching. I know many of you are quite pleasantly surprised by the the number 5 that we have unveiled today. I would like to know what you think about Nairobi Securities Exchange and how it has performed over the last 5 years. Feel free to engage us on our social media platforms, or write to us on the email address that is on the screen, or even come to our offices. We'll be more than happy to discuss further. My name is Paz Mushiri Mugo, the Managing Director of Nabo Capital, and you're watching Invest in Africa.